What's up, YouTube? Today we're going to be talking about fair value gaps. Alright, so what is a fair value gap? Well, this one is really easy. This is my favorite confluence, and this is one of the main confluences that I use to enter into my trades. So a fair value gap is simply a series of 3 candlesticks when the first candlestick is open and the wick of the first, or the middle candlestick is open, and the wick of the first and the third candlesticks do not touch, right? It's very easy to see. It's very visually intuitive. So right here, right, we have a 1 hour bullish fair value gap. Bullish because it's going up. And what makes it a gap? Well, you can see the start of this 3 candle series. The first wick is here. The second candle body is this big one right here, right? This Trump candle. And then the third candlestick did not rebalance this bullish price area, right? So we continued bullish. So that's what a fair value gap is. And then it also happens on the bearish side. So if we look here, still on the 1 hour, and this happens on every time frame. First wick here, second candle body, this big one, third wick up here, does not touch the first wick. Therefore, the space in between the first wick and the third wick is considered the gap. The entire candle is not considered a gap because where the wicks were are exactly where price got balanced. And where the third wick did not go is where this bearish price is still unfilled, right? And then as you can see, we got a 1 hour retrace, right? So we pulled back into this bearish price range, and then we respected it and moved downward. That is called a fair value gap retrace, right? All right, very, very simple. Now, obviously, these fair value gaps don't always get respected. Sometimes they get disrespected. And this is called a fair value gap inversion. Okay, so we can see here we have a 1 hour bearish fair value gap. And then a couple hours later, price decides to disrespect this range and close above it. So we've completely disrespected this entire range. Price has confidently moved up here, and then a lot of times what this does is this signals that price is going to continue going higher because we've broken through the bearish range and price has created a new trend. But obviously in this case, this was just a manipulation and we moved lower, right? And this, price action this month has been very I don't know if consolatory is a word, but it's been consolidating a lot. Let's see. Here we get a respect. We push up, right? This gap here. And then obviously here, very wicky, very rangy, just going up and down and up and down. But we do eventually fill this massive fair value gap. Obviously the Trump candle. I don't know what bro tweeted, but it was definitely something. And then price calmed down. The markets stopped overreacting. They collected their brains as a whole and they said, okay, let's get back to normal. And then they filled this whole range slowly but surely, and then it went pretty steep from here, and now we are below this range. Crazy. So this would be considered a bullish fair value gap. Disrespect, obviously. In the long run, we disrespected this gap. We reversed it, and now we're trading bearish. Amazing. Right? Here we have a 1 hour retrace. This is beautiful. This is what you want to see when you're trying to take a trade, is you want to see a wick retrace, right? The reason you want to see a wick more preferably than a candle body, there's nothing wrong with a candle body, but the reason a wick is preferred is because a wick simply tells us that price attempted to go up, but then it respected this price range, all right? And it happened quick enough that the body of whatever time frame you're on didn't even have a chance to close inside this range. The body closed all the way down here, all right? Which is a high confirmation that price is continuing the direction of that fair value gap, all right? Boom, another one right here. Clear as day. So yeah, guys, it's very, very simple. You know, it's not like you don't have to overthink it, right? Big wick inside this range, closed inside the range. That's okay. We didn't close above it, and then price moved down. This is my favorite confluence, ladies and gentlemen. Beautiful downtrend right here. Wow. And this is just another example that you don't always trust the inversion, right? We got these dual 15-minute inversions right here. We inverted this first bearish gap, and then we inverted this second bearish gap, right? A very strong move up. You would think, oh wow, price is finally going up, and then we come back down, right? On top of that, in this downtrend, we created a higher high, right? This happens sometimes. It doesn't happen all the time, but it can happen. It's just manipulation, guys. All right? That's why I'm going to be teaching you guys my strategy and the way I identify good trading setups in the markets before I actually enter a trade. But yeah, beautiful downtrend. Respect down here, this little gap right here. This wick retraces it, and then we move higher for a little bit. Very, very simple concept, guys. All right. I think I am done showing you guys enough gaps. You guys get the point. Hop on TradingView and look for some gaps yourself. Talk to you later, boys.